Hello, everyone, and welcome to the virtual non-deal roadshow presentation today. My name is Karina Tetrinova, virtual event moderator here at Renmark. And on behalf of our team, I'd like to thank all of you for joining us, especially those of you in Toronto and surrounding areas for the presentation of Agnico Eagle mines trading on the Toronto Stock Exchange and the New York Stock Exchange under ticker symbol AEM, as well as Pan American Silver trading on the Toronto Stock Exchange and the NASDAQ under ticker symbol PAAS. The topic of today's presentation is Pan American and Agnico Eagle offer to acquire Yamana Gold. Presenting today is Ammar Al-Joundi, CEO and President of Agnico Eagle, as well as Michael Steenman, President and CEO of Pan American Silver. And now with that, I'll turn the floor over to Ammar and to Michael.
Good morning, everyone. It's a pleasure to be here and give you an overview of this great transaction that we announced early November. Agnico Eagle and Pan American, we joined forces here to acquire Yamana Gold. We will, as Pan American, end up with the Latin American assets, and Agnico Eagle will end up with the North American assets or the Canadian assets. So a great transaction, I think, great offer. There are not many three-way transactions in the market, but this one makes us so much sense. It's so logic, and I made that easy during the presentation. Please keep in mind, not only I, but Ammar as well, we will use forward-looking statements, so cautionary note here up front. To the presenters, Ammar Al-Joundi will be on the call, just talking to you after I went through a few introductory slides. He's the President and Chief Executive of Agnico Eagle. I'm Michael Steenman, President and Chief Executive of Pan American Silver. So let's just dive right into the transaction. What it entices really in payments to the future or to the Yamana shareholders is a $1 billion cash, and then they will pay Pan American and Agnico shares for that transaction. What I really liked so much on this transaction, and I think I speak here for Ammar and probably for a large part of the market because the transaction has been received very positively, is really the fact how it plays out so well, how it puts the assets into the strongest hands. Agnico Eagle, over 60 years of experience in Canada, obviously taking on the other 50% of the Malartic mine, great big gold mine, largest gold mine in Canada, and taking on the other 50% from that mine. And Pan American, nearly 30 years of experience in Latin America. And we are already running 8 operations there, and we'll add a whole set of really high quality assets to our operation profile as well. So it just makes a lot of sense. As you said, we split it between north and south. Each of the companies works where we have most experience, and I think it will be a great outcome for all the shareholders involved, Agnico Eagle, Pan American, and obviously the Yamana shareholders as well. Really important, and when you do transactions like that, are synergies. We obviously don't do transactions just to grow the company. We do transactions to improve the company, to improve our portfolio of assets. So there have to be accretive transactions when you do that. And synergies are part of that. And when you look at the synergies there, Pan American will purchase 100% of the Yamana shares, and then the assets in Canada will be sold to Agnico Eagle. So of course there will be bigger synergies on our side, just because we're taking on all the offices. But about $400 to $600 million synergies on the Pan American side over the next 10 years. So really strong number there. And I think we have more details there on the synergies later on, Ammar, but maybe you want to talk about the synergies on the Agnico side?
Very briefly, we expect Michael and everyone else to be able to generate about $10 million a year, 10 to 15 million a year almost instantly through administrative costs. We don't need a joint venture. The nice thing about this deal, we're already effectively operating this asset. This allows us to get rid of the joint venture. That'll be 10 to 15 million dollars a year immediately from admin savings. And then we think there's another 10 to 15 million dollars a year as we integrate Malartic fully into our purchasing program for all of Ontario and Quebec, and we can talk about that later.
So yeah, great strong numbers on the synergy, really an important part of any transaction. And really strong numbers there on both sides. And as I said, the number bigger on the Pan American side of $40 to $60 million a year, because we are purchasing 100% of the Yamana shares and take over all the G&A and infrastructure that the company has. As I said at the beginning, it's a really great integration for us. Over 28 years of working experience in Latin America. That's really where we work. That's where the silver is. And as we are the second largest primary silver producer in the world, it's really a geological reason why we are working where we are working. The biggest silver producers in the world, Mexico and Peru, followed by Bolivia, Argentina. So that's why we're working in those jurisdictions, and will continue to work in those jurisdictions. This transaction will immediately add nearly 10 million ounces of silver production to our portfolio, and obviously a strong gold production profile as well. Just quickly, we still have, of course, Escobal in our portfolio, which is the best silver mine in the world. The process of the ILO 169 consultation there is ongoing. Once that will be finalized and that mine will be back into production, it would add another 20 to 25 million ounces of silver production a year, just from this one operation alone, to our portfolio. And when you look at the long-term pipeline, we have quite a few very large projects. We are actually having the largest silver reserve in the world as a company, over 520 million ounces. On top of it, we have about 1.3 billion ounces of silver resources in our resource book. So one part of that is the La Colorada skarn, a great discovery that we made just about 3.5 years ago, which sits below La Colorada, our biggest and best silver producing mine. And I encourage you to read up on the press releases that we put out on the skarn over every quarter. You see their amazing drill results. It's a very large ore body, probably 250 million tons already that we resourced out on that discovery. So just one example of the long-term pipeline projects that we have in our portfolio as well. Maybe Amar, I hand it over to you to talk about your pipeline.
Why do deals? The only reason we should do deals in this market is if it makes money for our shareholders. Is this deal going to make money for the Pan American, the Agnico, and the Yamana shareholders? Yes, it will, because of what Michael said earlier. It's really about putting the best assets into the strongest hands, so to generate the most value. Simply put, Yamana had a lot of very good assets. It was for sale. Where should those assets go? The Canadian assets, the Malartic mine and the Wasamac project, should go to Agnico Eagle, because we're already operating the Malartic mine. We're able to get rid of a JV. We're able to now, as one company with over 60 years of experience in that part of the world, we're able to transition what is Canada's largest open pit into what's going to be Canada's largest underground mine. And we'll talk about that later. But there's nobody in the world better able to do that than Agnico Eagle. With regards to the South American assets, as Michael said, over 20 years of experience in South America, some great projects, a good track record. Pan American is the right company to acquire those assets. It's as simple as that. And going forward, we will be able to extract not just additional value by eliminating the JV. We talked briefly about some of the synergies, but there's huge potential at Malartic and Wasamac, and importantly, and we'll get to this in a minute, there's even greater potential at Agnico Eagle, not just because of our history and experience in that region, but because of our consolidation of what we think is the best place in the world to be mining for gold.
Great, thank you, Amar. So that's just what we'll add to each of our companies. You see there are 4 new operations that will come in to Pan American between Chile, Brazil, and Argentina. Of course, we just heard from Amar. The other half of Malartic will go to Agnico Eagle, and there's some other really interesting projects that Agnico will take on in the district there as well. And I'm sure, Amar, you have a few slides later on really explaining that great district that you guys cover in Canada. As we said, long history, over 28 years of history in Latin America. That's what we are working. That's where our experience lies, and that's why it's the right fit for Pan American. It is a very financially very accretive transaction to us. There are low cost operations that we will add in Latin America, and I have a slide I think later on how much we add, but it's about 500,000, give or take 500,000 ounces of gold and nearly 10 million ounces of silver that will come into our production profile after the transaction close. By the way, as it stands at the moment, the vote will happen on the 31st of January 2023. There will be a vote on the Pan American silver side. We need 50% plus one. And obviously a vote on the Yamana side the same day, 31st of January 2023. The vote there required to sell the company will be 66 and 2/3. There's no vote required on the Agnico side. Afterwards, we need a few regulatory approvals, but I would estimate closing of the transaction still in Q1, hopefully quite early, somewhere in February, but that depends still on some of the regulatory improvements for that. Very important, the last point, and I think that's very important for all of us, very strong free cash flow generation. That's what we do as companies, generating free cash flow, of course, being able to reinvest in our operations, but also being able to return, of course, money to our shareholders, in our case in form of dividends already for 12, 13 years, and I think it's something similar for you, Amar. So very important on that side as well. You need to generate that free cash flow, not only in high metal prices, but throughout the cycle, in order to return at least one kind of a dividend to our shareholders anytime in the price cycle.
As we said before, it consolidates world-class long-life assets. It enhances our pipeline. Importantly, Agnico Eagle again is uniquely able to deliver all of the benefits on this, leveraging off our existing infrastructure and our relationship over decades. But at the bottom of the slide again, you know, Michael and I can talk about specifics, but at a very high level, you know, this transaction really is part of a global rationalization of precious metal assets by operators with strong regional expertise and great track records of value creation. And that's exactly what this deal is.
We already talked about the synergies. We have it in another slide here, just because it's such a, you know, it is an important part of transactions. When you look at the transactions in our space, there's really two things. It has to be accretive. It has to be accretive on many financial metrics, so lower costs, improvement of the quality of your assets, accretive to cash flow, and of course there will be synergies coming with it. Just because you don't need, you know, double up on your G&A and on your offices, etc. That's really what flows through in those numbers. So really, really important to both of us. And as I said, the number is bigger on the Pan American side for reasons as we purchased the entire company, but you know, very significant number there on the Agnico side as well. So keep that always in mind when you look at transactions. There has to be synergies when you do a transaction. That's one of the reasons to do that rationalization, as Amar called it in the precious metal space.
Just very briefly, you know, from our, again, it's not rocket science on our side. As soon as this deal happens, we are able to eliminate some administrative costs with the JV and very quickly bring Malartic into our overall purchasing program, which will probably add about another $10 to $15 million a year. So we're quite confident in, you know, total synergies in the neighborhood of say $20 million a year. That's pretty impressive, given that we think this is a multi-decade mine. So, you know, that $20 million a year, if over 10 or 20 years, is $200 to $400 million. That's a lot of money. It adds up.
I want to talk a bit about ESG here, just because it is an integral and really important part to both companies. And you see there some of the ratings from some of the rating agencies. There are obviously many more, but very interesting. You know, we're working very different jurisdiction. Nevertheless, our ratings are actually very similar, and that's just for a logic reason. It is important to us. It is important to Agnico. Has a long history on strong work on the ESG side. We are publishing our sustainability report since 2010. You will find them all on our website. I'm sure there's a similar story, obviously, on the Agnico side. So you will find all the details on how we are working in our relative jurisdictions and what we are doing there. And that good work is reflected in those ratings. We both aim to reduce our GHG emissions by 30% by 2030 and have an aspirational goal to go to zero by 2050. So we're very much aligned, although we don't work together here in the future, but very much aligned how the companies work. Keep always an eye on the ESG scores, very, very important for any mining company in the world. And with that, I will just give you an overview of some of the Pan American's assets, and then we'll hand over to Amar. As we said, strong increase of production that we're going to see after this transaction, strong increase of trading liquidity as well. Pan American stock was always very liquid, but it will add to that liquidity as well. So it's a great stock to buy. You can trade in and make your trading decisions very easy. There's a lot of liquidity available, probably right now around 4.5 to 5 million shares a day. So a lot of liquidity available there. As I said, we add 2 new jurisdictions to our Latin American portfolio, Brazil and Chile, both jurisdictions that I personally worked in before. And I'm really looking forward to add those very strong mining jurisdictions to our portfolio. So it kind of rounds it out. We are in, especially in South and Latin America, in every country. And of course, that adds other synergies as we can combine offices to 1 or 2 offices and work much more efficient on our assets there in Latin America. I talked about the financial accretion of this operation here. We are estimating a pro forma operating cash flow of plus $650 million for the first 5 years, and that excludes Escobal. As I said, when Escobal will be on, that will be a completely different story, as that is such a strong mine. As I said, the best already built silver operation in the world by far, and it will allow us with that cash flow to really proceed on big projects like the La Colorada Skarn, the great discovery below our best silver mine, and spend the capital necessary to continue to explore and start to advance that great project, which will be a multi-decade operation for Pan American Silver. As I said, the resource is over 250 million tons already. That will continue to grow, and it will be a very large operation. And as I said, it will run hopefully for 40-year plus when that skarn is up and running. So there you see the location of all the mines and projects for the combined company. There's a lot of dots. There's, as I said, a few projects in there as well. They're not all producing mines, but you see now what I mean when I said we are where the silver is. Most of the silver projects or silver mines in the world are in the Cordillera, so somewhere from southern Argentina all the way up to Alaska. And that's really geological reasons. So that's where the silver is. And silver occurs not alone. Silver occurs with base metals or with gold. And that's why we see this kind of production profile that we have, where we produce base metals and gold as well. We have 2 operations, we'll have 2 operations further to the east of the Cordillera. If you see there in the north, it's Timmins, that is already with us for a number of years. And the new one will be in Brazil, Jacobina. They're away from the Cordillera and they don't produce any silver. Those are really pure gold mines again. That's just the geology, the geological reason for that. When you look at the pro forma revenue by country, further diversification, which is very important to us, and you see there's really not one country anymore that just sticks out as kind of overwhelmingly big. So there's like all the countries around 20%. So great diversification, and that's based on a pro forma revenue of close to $3 billion for the coming years. So that's the increase of our production profile that you're going to see once the transaction is closed. So large increase in our silver and a very large increase in our gold side as well. That will bring down the gold-silver ratio in our production a bit. I think we'll be probably in the low 22% on the silver side until Escobal is back on. That will bring us back up to probably about 40 to 45% silver to gold in our production. So that's still our focus. We are a silver miner, and as I said, it comes with gold, it comes with base metals. Right now, the next step will be a bit on the gold side, but with Escobal and the Skarn at La Colorada, some very, very strong silver production to come in the future. Very strong financial position as well. This is numbers at the end of Q3. When you look at, of course, that this is all to change a little bit once the two companies are combined, and depending in which month we will close the transaction. Right now, there's over $680 million liquidity. We're actually working right now to increase our revolving credit facility to $750 million. Pan American, historically, we did not have and still don't have long-term debt. We don't have any bank debt. You see, we have about $60 million of lease obligations for equipment. That's the only debt that we have on a balance sheet. We will take on some long-term debt from Yamana, some great bonds that Yamana has. So in total, we'll end up with about $850 million of debt. And when you look there at the debt to EBITDA, 0.8 times, so a very manageable debt level for Pan American. As I said, great bonds that will be rolled over to Pan American, 0.8 times, very manageable at that level. But our capital allocation always focuses on keeping very strong balance sheet, and that will not change in the future. I will have the same focus going forward. And with that, I hand it over to you, Amar.
Well, thank you again, Michael. I'll go through this fairly quickly. For us, this deal really hits a lot of key points. First and foremost, it allows us to realize the full potential of these assets, world-class assets. Again, Malartic, one of the biggest gold mines in the world, decades of potential. And again, it allows Agnico Eagle, who's already operating this, by the way, and has been operating in that region for over 60 years, to realize the full potential. And we'll get to that. It also allows us to further consolidate what we think is arguably the best place in the world to mine for gold, based on two criteria, which are the geologic potential for multiple mines over multiple decades, and the political stability to actually be able to operate multiple mines for multiple decades. And we'll talk about that. It's immediate value creation through the immediate synergies that we think we're going to realize right away. And importantly, this is very low risk. This is, for us, the other half of Malartic, which we're already operating, and some other assets in Ontario and Quebec, in regions we've been for a long time. And for Michael and his team at Pan American, where they've been operating for 28 years, it's assets in regions that they are world-class at. If I go to the next, and really the point at the bottom, this continues the development of long-term competitive advantage in the Quebec-Ontario platform. What do we mean by that? Agnico Eagle is a little bit different than most of our peers. Most of our peers talk about global gold mining. We're not a global gold miner. We won't go anywhere in the world to build a mine. What we are regional gold miners. We operate in 5 regions around the world. This region we call the Abitibi, which is the Ontario-Quebec region. We're in Nunavut, we're in Mexico, we're in Northern Europe, and we're in Australia. Every one of those regions, huge geologic potential and political stability to be able to operate for decades. So This transaction in on its own, and I'll use this little highlighter here, and I hope you can see it. This is the Malartic mine that we're already operating. This is the Wasamac project that we're also getting. Remember, we're getting both of these plus some other assets throughout this region. In this region, and in Canada, we produce more gold than the next 8 companies combined. When you take a look at our reserves and resources, in this region alone, we have as much gold in the ground as Barrick and Newmont combined in their Nevada joint venture. So you can see that this helps build a competitive advantage. What makes a good miner in a region? If everybody has good engineers and good balance sheet and access to good equipment, what really makes a good miner is, do you know the ground better? Do you know the suppliers better? Do you know the contractors better? Do you know the permitting better? In this part of the world where we've been for 65 years and produce more gold than the next 8 companies combined, we are the employer of choice. We know the contractors, we know the suppliers. In fact, some of these people, we helped their grandparents start the business 60 years ago. So you can see that this is a huge potential for us. And I want to point out before I go to the next chart, this distance between Wasamac and Canadian Malartic is only 80 kilometers, and it's connected by a railway line. This is the Malartic mine. The current life of mine has the gold in these open pits, and it has 7 million ounces of this envelope that we've drilled so far. But we've drilled already 15 million ounces here. So we think that in the life of mine, that 7 million ounces that it's in there now is going to increase materially. We also have put out some step-out holes. A step-out hole, we went 1 kilometer to the east, and we hit what we think, now to be sure, you need more drilling, but we hit what we think is an extension of this ore zone within 10 meters of where we thought we were going to hit it. We've gone out to 1.7 kilometers, and we've hit, again, what we think, it's early, is the same ore body. And even 700 meters to the west we've hit. So we are of the strong view that there are decades of potential here. Again, this mine is transitioning from Canada's largest open pit gold mine to Canada's largest underground gold mine. Now, when that happens, again, this is the concept of why we think we can uniquely create a lot more value. When this mine goes from an open pit mine to an underground mine, it will go from roughly, ballpark, 60,000 tons a day at the mill at 1 gram to about 20,000 tons a day at 3 grams, roughly. What that means is there's 40,000 tons a day of spare mill capacity coming in towards 2028, 2029, and Agnico is best positioned to be able to take advantage of that. For example, this is the Malartic mine right here. What would you do if you were Agnico Eagle and you were going to have 40,000 tons a day of spare mill capacity? By the way, an average decent sized mill is between 5,000 and 10,000 tons a day. So this is a huge capacity. What you would do is you would acquire all the land along the strike. And you can see all of this shaded area is land that we control, where we've got people on the ground and where we think we can bring in gold into this mill that's already built. To put things into perspective, when you build a mine, roughly half the cost is for the mill. So immediately you have an ability to create value. And here we just point out that we're building an underground mine on time, on schedule, and we're better able to do it than anyone else. If you look in this region, we talked about the Abitibi region, we have a lot of things going on in this, some pretty sizable projects. But what I want to emphasize to all of you is this is part of our strategy, which is focus on regions and focus on existing infrastructure where you can leverage the capital you've already got on the ground. The Amalgamated Kirkland deposit is a deposit that's right beside our Macassa mine. The Upper Beaver mine is within 50 to 80 kilometers of mills we've already got in place. This Odyssey extension is at Malartic that we're buying the other half of. Wasamac is within 80 kilometers by rail. It's very early, but our view is that Wasamac, as it gets developed, we may be able to actually use the Malartic mill. and probably save a few $100 million. I repeat, a few $100 million. And again, this concept of excess capacity. In the mining business, the best return on capital and the best risk-adjusted return on capital is always expanding and leveraging off existing infrastructure in existing regions with existing teams. Very briefly on the transaction summary, the total price was about $4.8 billion. That number will go up and down with share prices because a considerable amount of the transaction is based on shares, although there is $1 billion of cash. The structure, as Michael said, it's Pan American acquiring Yamana and simultaneously selling the Canadian assets to Agnico Eagle. Very efficient, very effective. The votes are estimated to be January 31st. Pan American needs 50% plus one. Yamana needs 2/3. And Agnico, because we're a bigger company, and this is a relatively smaller deal, we do not need a vote. So in summary, this is a transaction that creates value for all shareholders, and you can see that based on the share price reaction when it was announced. It does put the best assets that Yamana has into the best hands. The Canadian assets into Agnico Eagles and the South American assets into Pan American. It transforms Pan American truly, as Michael said, into the leading, I would say, Latin American precious metals miner. Agnico Eagle is uniquely able to realize the full potential of Malartic, one of the biggest and best gold mines in the world in what is arguably the best region to mine for gold. It provides the Yamana shareholders with all the upside of both Pan American and Agnico Eagle, clear opportunities to deliver synergies, and again, very low execution risk. So we think this is a deal that makes a lot of sense, and we will now open it up to questions.
Perfect. Thank you very much for the presentation. And with that, we'll now take the questions. The first question here is, will Agnico keep the workers that are currently at Malartic, or will Yamana keep these staff members?
We absolutely will keep the workers working at Malartic. Most of the workers at Malartic and the senior team there are actually Agnico people that we transferred there because, again, this is in our backyard. So these are Agnico people. We're delighted to keep them.
What are the next steps for Agnico now that they own 100% of the Malartic mine?
Well, we already have a lot of plans in place, as you would expect. Having 50% of one of the biggest and best gold mines in the world, and we're now going to have 100%. So, as some people may or may not know, we are already building the underground mine. We expect to start getting some production from that as early as March or April of next year through the ramp. We're building a shaft to go down, and we're exploring vigorously in the area. Again, the ore body's still wide open, and importantly, Karina, we're also redoubling our efforts to look at what ore bodies are available in the regions that we have nearby, so that we can bring it into the mill when the mill becomes available, or 40,000 tons a day becomes available in 5 or 6 years.
Looking at the exploration projects for Agnico and Pan American, which projects has the most potential to go into the production first?
Well, I'll go very quickly, and then and maybe Michael can talk about Pan American. So our two biggest mines, Detour and Malartic, are both open, and they are still expanding. We've announced that our objective at Detour is to get that mine from 700,000 ounces to 1 million ounces annually. I mean, that's a lofty target, and we said we would update the market towards the end of next year on that. And at Malartic, again, we talked about the huge potential, we think multiple decades. But, we've had very good drill results at Kittilä, which is still open, good results at Meliadine, which is still open, some aggressive mining, drilling at Fosterville, at Macassa, which is still open. So a lot of good opportunities, and again, in regions we operate and we know better than anyone else. Michael?
Yeah, sure. And look, very similar focus on our side. We're mostly exploring with on-site exploration. This is really, as Amar said, look, you can't have better return on your capital than finding more around or close to your current operation where you already spent the capital to build the plant and the infrastructure. So it makes a lot of sense to explore there and try to grow your operations around that. That's what we are focused on all the time. I mean, with that exploration result at La Colorada, we really made the mark, I think, finding that big skarn below our current operation, and that's really the project we are focusing on right now. And that will, as I said, hopefully result in a multi-decade operation at La Colorada for us. Yeah, I keep you encouraged to look at Escobal as well, because it's a very interesting situation where the mine is actually already built, and once the consultation is finished and approved by the courts, the mine can go right into production, as it has been in production, and the mill and the mine are in shape to restart basically immediately some kind of production, and then ramp up to the full 20 to 22 million ounce production, probably over the time of a year.
Will Agnico take the purchase amount in debt or in cash?
We are paying $1 billion in cash, and the rest is going to be with shares. And the cash, we have we'll use some portion of cash on hand, and then we'll just figure out the rest. It's really just a capital allocation question.
Once the deal is complete, how much debt will you have on the books, and what is your strategy for paying it down?
Our net debt will be, I think right now, after this, it'll probably be about $1.5 billion. We've been paying down debt as it comes due every year for the last several years. Actually, our credit rating, it's too early to say, might actually go up because this is a cash generating asset. So this is actually accretive from a cash flow per share perspective.
Can you provide some additional details on management's cost-saving efforts?
I mean, with regards to generically overall, every miner in the world is focused on cost control. That's part of our job, and especially in this inflationary environment. I could go on and on. I don't want to speak too much, but we do have some cost advantages relative to our peers. Our labor costs, which are 40% of our overall costs, are in Canadian dollars and Mexican pesos and euros and Australian dollars, all of which have devalued versus the US dollar. In Ontario and Quebec, well, Quebec, 100% of our energy is green. In Ontario and Quebec, 98% is either hydro or nuclear, so we don't really have any exposure to fossil fuel price exposure to electricity in those regions. Again, I could go on and on, but I'd like to maybe turn it over to Michael, give him a shot.
Yeah, very, very similar, Amar. A lot of our costs are in local currencies, like for you, in all the countries you are working. At the moment with the strong US dollar, of course, that helps on the cost side. I mean, of course, there has been, and we still see inflationary pressures on costs in the sector, mostly on energy prices, and anything you purchase, from food to fuel to steel, you feel it as well when you do your groceries and purchase your new car. The same we see across the board, but again, a transaction like that helps as well, because they're lower cost and larger operations that come in and make stronger and bigger companies that are stronger to deal with this kind of cost pressures while we go through this inflationary period.
With Pan American generating strong cash flows, are you looking at doing more acquisitions in the pipeline for 2023?
Well, I think there's going to be a lot of integration work here. This is a very large transaction for us, a transformational transaction. So I think the next step will really be the focus on optimizing that portfolio, and that optimization will take some time. That means, look where we move some of the smaller assets maybe out, focus on some on the bigger mines, etc. So that will take probably most of 2023. So I don't think so we're going to see, a large-scale transaction in 2023. We always look around and optimize some of our exploration portfolio, but those are smaller transactions.
Under the terms of the Pan American Agnico arrangement agreement, are Pan American and Agnico combining to pay that $150 million to Yamana, or is the payment strictly coming from the Pan American books?
No, that payment came from Pan American. We made that cash payment. That's, I think, the here refers to 50% of the break fee, which Pan American paid to Yamana, and Yamana paid the other 150 to Gold Fields. I assume that's the 150, or maybe the question referred to the investment that Agnico did, or partial investment in Pan American when we announced the deal, which was also $150 million, which is a different story. That's really an investment that Agnico did in Pan American at the beginning when we announced the transaction.
Considering the company's size, is Agnico a play on higher gold prices, or can you make a case for more organic, low capex growth?
Well, it's both. I mean, clearly, as one of the biggest producers in the world, we are a play on the gold price, but we are also, in my humble opinion, the go-to for organic growth. You know, on a per share basis, which is all our shareholders should care about, on a per share basis, we've been able to grow gold production per share by about 3 to 4% a year on average over the last 20 years. So certainly we've demonstrated both leverage to gold and the ability for organic growth. And I would say in particular, our regional strategy, which puts us in the best places in the world, where we have a competitive advantage, positions us well for that in the future as well.
More broadly, can you comment on how this deal increases Agnico's influence as a top-tier gold producer?
Well, I think the most important thing for us is to make money for our shareholders in a responsible manner, being a great employer and being a great a member of the community. You know, how influential we are, I don't know, but you know, this deal certainly, we think, allows us to have the potential to really add a lot of value to our shareholders, and that's why we're doing it.
Thank you for your answer, Amar, and also thank you to you, Michael, as well for taking the questions. With that, this concludes the Q&A for today's presentation. Thank you to the viewers who sent in questions. If you have any more, you're always able to contact your account manager here at Renmark. Now, before we go, Amar and Michael, I'll hand the floor over to the both of you for final remarks.
Yeah, sure. Just thank you, everyone, to be on this call. I'm sure, I hope we could transmit how interesting this transaction is for both of us, and how interesting this will be for all the three shareholders involved in this this deal. It's not happening very often that you can announce large three-way transaction like this, but I think this is just such a logic transaction that it's a very easy story to tell, and when it's an easy story to tell, you know that you have a good deal. That's all I have on my side, Amar.
Well, I'd just like to say a couple of things. One is, we really truly believe this deal makes a lot of sense, and that this transaction creates value for shareholders. And that's the business that Michael's in, that's the business I'm in, that's the business the Yamana executives are in. So we really do believe this makes sense, and we hope we've been able to demonstrate that. And then just finally, I'd just like to thank Michael. I've had a chance to get to work with him now for you know, several months. You know, it's been a real pleasure. It's also been a real pleasure when we were speaking with our colleagues at Yamana. So, you know, I just want everybody to know that, you know, you've got three companies here that are working lockstep to try to create value for all of you who are the owners of our companies. Thank you.
And once again, this was Agnico Eagle Mines, trading on the Toronto Stock Exchange and the New York Stock Exchange under ticker symbol AEM, as well as Pan American Silver, trading on the Toronto Stock Exchange and the NASDAQ under ticker symbol PAAS. Thank you again, everyone in Toronto and surrounding areas, for joining us today, and stay tuned for future presentations in your area.